Welcome to the live stream. Welcome to the basement. We have a massive show today. $63 silver. We've raised the target for next year. You're going to know why when we get through what is an incredible amount of data that we have to cover today. Some stories that are going to make your skin curl, okay? On top of that, we've got massive news this week on Friday. The biggest news story of the year for precious metals, Jerome Powell at the Jackson Hole, Wyoming. We're going to talk about why that is so critical for us to pay attention to as we head into the end of this week. And of course, we're going to talk about the gold price. We're going to talk about the silver price. We're also going to talk about the precious metal mining stocks. But first, I want to talk about you. Yeah, you. There's no Ron's Basement without you. Thank you for choosing to be here. It's a big deal. Please subscribe to the channel. That is free. Leave a comment in the comment section. Super chat, super thanks, whatever those things are never expected, always appreciated. Let's dig into the first big story of the week, guys. On Friday, Jerome Powell will be in Jackson Hole, Wyoming, convening with all of the other big central bankers from all around the world. The reason why this is so important is there have been Jackson Hole, Wyoming meetings in the past that have created massive paradigm shifts in the world's monetary fiscal system and had major impact on the price of silver and gold. I'm making a prediction. I think that we are due for that to happen again at this meeting. Jerome Powell will be delivering a speech on Friday, but take a look at this. I think this just about sums up what we can expect to see. Make gold great again, always hitting it out of the park. Big Powell Jackson Hole speech on Friday. Here we go. Take a look at this. Hello, darkness, my old friend. And there's our friend Jerome looking down and wondering how he can print more gold, which we all know is not at all possible. Okay. The last time we did have the reason why we want to pay attention to this, there was a Ben Bernanke speech at a Jackson Hole, Wyoming convention, whatever the heck they call it, powwow back, I don't know, 12 years ago, 14 years ago, who cares? But that definitively marked a change in the paradigm for silver and gold. We could likely see that again. And look, guys, you know the backstory. The United States, from a fiscal perspective, with everything going on, it's going to be fireworks Friday. That's my prediction. Right, with everything going on in the monetary system, the fiscal system, the U.S. debt level, the world debt level, and to top it all off, we've got the President of the United States and Washington, D.C. at war with the Fed. I don't know. Just be ready, be prepared. But I do absolutely believe that in the long run, short run, and medium run, it's going to be positive for the price of the metals. Okay, $63 silver. Did I tell you that already? How do you feel about $63 silver? I have a vision that by April Fool's Day 2026, we are going to have $63 silver. Let's go back to the Fed real quickly. We still have elevated expectations that we are going to have. There we go. That we're going to have a rate cut here in 29 days. Again, that will be bullish for the price. It dropped a little bit from this morning, but as you can see clearly on this chart from the CME FedWatch tool, what that's basically telling us is that at the September meeting of the Fed, there's now an 83% chance that rates will get cut by 0.25%. We are now at 17% that we will not have a rate cut. What we do know that we have right now is a stagflationary environment. We have an economy that is slowing. Okay, we have inflation that is up and will only get worse as the impact of the Trump tariffs continue to feed through. There's a lag effect. Remember, we always talked about the lag effect. The impact from those tariffs aren't going to be felt until 2, 3, 4, 5, 6 months later. And that's just what we're going to be facing here in the coming months. Stagflation is the most lucrative environment, the most fertile soil that you could ever ask for the price of gold and silver. Look no further than back to the 1970s when you had the silver price that went up, like 27.6 times? Not percent, times. And gold skyrocketed as well. We are moving into an environment where we absolutely have winds in our sail. Look at this. This is absolutely crazy. and just gives us more proof that the overall fiscal situation in the country is just out of control. And there we go. From the Kobisi letter, shocking stat of the day: interest expense on U.S. debt has reached, excuse me, somebody keeps calling me, $1 trillion for the first 10 months of fiscal year 2025, the most on record for this period. Okay, but that's not the shocking part. This puts us on track to exceed 1.2 trillion for a full year in interest expense. Over the last 12 months, gross interest expense also hit a record of 1.2 trillion. As a result, the interest now, this interest now the second largest U.S. government outlay, that makes interest the second largest government outlay, only behind Social Security, which is now 1.5 trillion. Don't worry, Social Security, interest expense is coming for you. This means interest expense is now higher than the defense healthcare spending, which stood at 900 billion over the past year. This, boys and girls, is a crisis, and it's been showed out. Let's quickly look at this. All right, this is the old WTF happened in 1971. What happens in 1971? You take the U.S. dollar off the gold standard, and there's chart after chart showing, like this one, worker pay has not kept pace with production since the 1970s. See the orange line? That's work net productivity. See the blue line? That's hourly compensation. I highly recommend, when you get some time, to go out and look at this. WTF happened in 1971. Real GDP, real wages, and trade policies in the U.S. Since from 1947 to 2014. Okay, as you can see in the blue line, real GDP per capita skyrocketed. Hey, great, right? Real GDP per full-time employee skyrocketed. Average real wage, GDP deflator. Average real wage adjusted for CPI. So as you can see right here in 1971, everything did great except for the average American. Okay. Income gains widely shared in early post-war decade, but not since then. Again, the arrow points to 1970. Okay. And as you can see, the red line represents the top 1% of earners. They've done really great. Okay. The blue line represents the bottom 90% of earners, and they've done very, very poorly. Okay. Gold and the gold price. Let's switch over to the gold price now. Will have a major impact on the silver price. We got some interesting analysis here from the Squeaky Mouse, who's saying that once gold breaks out, I don't expect a retest and think we will see a strong move upwards, catching many off guard. What this chart is showing us is this massive consolidation period that we've been in. And guys, I know today the price of silver, the price of gold are taking it a little bit on the chin. However, the long-term outlook for gold and silver on every level remains super, super optimistic. All right, let's look at what our friend Rashad is showing us. We are zipping through, but we just have a lot to look at today. Rashad says gold has two major breakout scenarios going forward. First scenario, further sideways price action or a slow grind until late August, early September, and then breakout and moderate advance. The second scenario is that I see gold sell off sharply. Is that what we're seeing today? The 32.25, 32.50 area, clearing out stop losses and then quickly rallies. He favors the second option. It is going to be more dynamic and end faster. Let's see which one materializes. He's ready for both. In any case, I'm strongly convinced that big move is going to happen before mid-September, so about 1 month from now. And again, on that chart, we can see that massive consolidation phase. What he's talking about is us coming down, into this range a little bit and then shooting much, much, much higher. Okay. This is interesting. And again, we're talking about gold because gold does impact silver. But did you know this about gold? And we're going to talk about why this is important. 67%, right? More than 2/3 of above ground gold is in private hands. Is it in your hands? Huh? Basement dwellers? And by the way, thank you guys for being down here, coming down, joining us live. It's a big deal. Again, you choose to be here. We love to talk about gold and silver. Don't forget, subscribe to the channel. 2/3 of gold is held in private hands, 17% held by central only. I didn't realize that. The world's most decentralized asset, the people's money. I love this concept of decentralized assets and decentralization. As what that means is there is no central authority that controls the price value of gold. They can try, right? The US government tried taking us off the gold standard, like we talked about earlier. Same is true with silver. There's no centralized authority that ultimately can control the value of silver. Now, they may, if you choose to price your silver and use the US dollar as the unit of measure, they may have some short-term sway over the price. But in the long run, no one can control the real value, the real quote unquote price. I don't like using the P word, but for lack of a better word coming to my mind, that's what I'll say, right? The real value of, so it's decentralized. There's no central bank. There's no central authority that controls gold and silver. It's always been that way, and it will always be that way. Talking about gold, more good news. And you know, gold impacts silver, no doubt about it. This is coming to us from the Silver Academy. Let's share the right screen here. There we go. And boom, the gold avalanche has begun. China just forced the market hands. And what he's talking about in this article is this big news story that came out a while back that the Chinese government is, let's say, encouraging the big Chinese insurance companies, and they are huge. They are huge to put 1% of their assets into gold. Okay. Again, what happens with gold will happen with silver. And you may say, oh, only 1%. It's massive. The Chinese insurance industry is big. We continue to get more and more stories about governments and, let's say, wealthy people, maybe those 2/3 that are all over the world, using gold to be a safeguard against what could be some coming financial and monetary storms on our near-term horizon. All right, here we go. This is great. Can you see this coming to the west? This was just an awesome little quick video from David Lee. This shows Chinese investors continue to flock to the Hubei gold market. Look at this, guys. Imagine this. Let's make that full screen. That's a gold market in China. Is that going to be it next? Is that going to be your local coin shop? Because the East is leading the West when it comes to gold and silver. Look no further than this. Another great one. Uh-oh, wrong one. Hold on here. Here we go. Let's make sure we got you on the right screen. Man, we are all over the place, having some technical difficulties this morning. Apologize for that. These are the lovely sounds you can hear around the Hubei gold market. The sound of 15, there it is again, the Hubei gold market, the sounds of 15 kilograms. And I don't know that you have volume right now, guys. It looks like we are having some technical issues, and I don't think upstairs Susie is here to help us, but let me refresh this. Hold on. See if we can get this to come up for you. Come on, X. We're relying on you. What this showed was the actual physical metal being moved. Okay. I don't know if you guys can hear that or not. Huh. Looks like we're having some issues with the X platform. What this shows are the actual large physical silver bars being moved around in the Chinese silver market. Okay. Another piece of data, this about silver in particular, the SLV ETF. Now, this is a big deal because as the Western investors come back to silver as the big money, right? Not the governments, but the big money, the hedge funds, the private family offices, the people with a lot of money get back into silver. One way they're likely to do that is through the silver ETFs. And the silver ETF sucked 280. Here we go. There we go. From Make Gold Great Again. Sorry, guys. The silver ETF sucked 285 metric tons of silver away from the LBMA yesterday. And we already know that the inventory levels at these COMEX and the LBMA, the London Bullion Market Association, are getting precariously low. Looks like this originally came from Solve Netug iShares silver ETF metric tons of silver within the trust in London and New York. Let's pull that up on full screen. Wow, look at that trend, guys. Huh? Are you noticing something here on that chart? See my red arrow? It is going up and up and up again. And no discussion of silver and gold would be complete without speaking of our friends in India. We love India. Indian people love gold and silver. It's ingrained in their culture, much like it's ingrained in the Chinese culture. But now get this, in India, they are putting out, wrong one. Darn it, did I forget to pull it up? Oh, well, I'll just tell you. There's a lot for me to show to you guys today. There's a lot going on in the world of gold and silver. They're putting out silver and gold vending machines in India that are like updated with the most recent prices. It's happening right now. It's happening all around the world because remember, gold and silver are the original decentralized assets, the original forms of money for the world. Crypto has that same attribute as well. Crypto is decentralized. Nobody can control, no government, whatever can control the value of Bitcoin or any other cryptocurrency. Something that's very much shared between the crypto world and the precious metal world. So what happens in India does have a big impact on the ultimate price of silver and gold. And there's 1.4 billion people in India who love silver and love gold and are becoming more and more wealthy by the day. I read some estimate not long ago that over the next 5 years, they said that 100 million Indian people were going to be moving into the consumer class. That means they buy cell phones. That means they buy electronics. That means they have extra money to buy silver and gold. And one final crazy statistic, because guys, when big money, when the generalist investors come back to the gold and silver mining stocks, it's going to be like trying to drain Hoover Dam with a garden hose. And this is just mind-numbing. Two quick statistics for you to look at when it comes to silver and gold. Here's the first one. Hold on here. Okay. Just one company is worth 5 times more than all the largest gold miners on earth. Yeah, guys, Microsoft Corporation, their value as a company is worth 5 times the largest 112 gold mining companies on earth. Just think, right? If just a little bit of that money, 5 times, comes into the gold mining sector. But what's important to remember about that is the fact that when that money comes back, it's relatively a small sector, and it will have a major, major impact. It's the law of small numbers working for us. And this one, another one from Make Gold Great Again, NVIDIA is even more extreme. It's worth 6.5 times all the big gold miners on the planet. And you know what happens to gold is going to happen to silver. It's absolutely crazy what's developing in the world right now. Friday is a big, big day when Jerome Powell speaks at the Jackson Hole, Wyoming summit of all the big central bankers throughout the world. We could have major fireworks in the precious metals markets. Be ready, right? I know today really stinks, particularly for silver, but guys, this is a long ride. Yeah, when we start saying $37 silver, guess what, guys? Guess what? Right? A lot of you have been with me for years. We sat down here and talked about silver when it was $14 per ounce. Okay, if I told you then that in August of 2025, we'd be hanging out and we'd be complaining that silver's down 65 cents to $37 per ounce, come on. Okay. And I feel in my heart, now again, I'm not a financial advisor. Don't make any financial decisions based on what I may or may not be saying to you today. But when I look out just 6 short months from now, I could think us looking back, maybe we'll be complaining. Think about this. I want you to envision 6 months from now. Maybe we'll be complaining saying, oh, boo-hoo, the silver price is down a whole dollar. It dropped from 64 dollars per ounce all the way down to 63. The sky is falling, right? The future is super bright for the precious metals because you know what? It always has been super bright. I could have been sitting down here 3,000 years ago telling you that silver was a good thing to put your money into. Now, again, be responsible. I'm not a financial advisor, but imagine me now right here being a 2,000-year-old guy. And I told you 2,000 years ago, would you be happy that you put some of your wealth into precious metals? You're darn right you would be. Think about it. Please subscribe to the channel, give the video a thumbs up, share this wherever you can. We're in for a fun ride with both the precious metals, gold and silver, as we head into the coming weeks, months, quarters, years, and decades. Sorry, we're going to be together for a long time. I want you to come back, right? You are the most important part of this community. Okay, we're in for a good, wild ride. We want to do things, whether that's precious metals, crypto, to protect ourselves from what could be, right? You never know. Maybe this is the first fiat currency that lasts forever. But based upon what we know throughout history, fiat currencies do have a strong track record of let's just say, running into a little bit of trouble. You take care of yourself, be good, and I'll look forward to seeing you next time. Bye-bye.